Okay, part three is our balance sheet. And with our balance sheet, again, we need our adjusted trial balance that we created in 22-1. And then we also need our statement of stockholders' equity for a few things related to stockholders' equity at the bottom of our balance sheet. So as I scroll down, the instructions are actually quite brief. It just says complete the balance sheet for the current year. So I'm going to adjust my question assets so it's up at the top and out of the way, and I'm going to scroll down. Here we have our balance sheet heading again, Travel Light Corporation balance sheet. This is actually incorrect because remember that balance sheet is at a specific snippet of time, so there should not be for the year ended here. Applia has made a boo-boo, which it can obviously do, but just remember that when you're doing that, specifically if it were to be on the test where you were writing it out, that you would need to have just the date. So to start with, let's go ahead and start plugging in our assets listed under current assets. Remember, current assets are anything that we can turn into cash within a year's time. So we start plugging in our amounts for each of our assets. I'm just going down the line here. We will get to our first one here, accounts receivable. So we start with our balance in accounts receivable, which is $35,047.05. And then remember that it also has a contra account, the allowance for uncollectible accounts, which are accounts that we deem to be uncollectible, which is $3,697.32. So to find our up-to-date balance of accounts receivable, we take our balance and subtract out the allowance. And so we end up with $31,349.73. And then we continue on with notes receivable and interest receivable. Merchandise inventory is next. And then I need to scroll a little bit so I can see my supplies, which are $126, and prepaid insurance, which is $1535.80. Okay, so now that I have all of my current assets in here, one thing you want to make sure to do when you're totaling is to disregard this first column. We do not need to add those two because remember, this is our updated balance of accounts receivable. So we just take all the numbers in the second column and we total them up, and that's going to give us our total current assets, which comes to $128,859.30. Okay. Then we have a plant asset section, which is something different than we've had before. With our sole proprietorships, we didn't have plant assets to pay attention to. So our plant assets over here are our equipment, which has a balance of $25,069.60. But again, it has a contra account, accumulated depreciation, which has a balance of $8,796.20. So to find our updated balance for our plant assets, we take our equipment and subtract out our accumulated depreciation, and we wind up with a balance of $16,273.40. So to figure our current assets, or our total assets, I should say, we take our total current assets and add it to our total plant assets. And when we do that, we get a total of 145, 132, and 70 cents. So $145,132.70. Then we are on to our liabilities section. So moving my adjusted trial balance, my current liability starts with accounts payable. So I just start listing those here. $16,058.09. Sales tax is $33.26. Oops, one too many. $33.26.30. Notes payable is $7,200. Interest payable is $277.58. Unearned rent income, again, is a liability which has a balance of $3,000. Employee income tax payable is $826.20. Oops. Social Security payable $774.60. Medicare is $178.76. And again, I'm getting all of this information from our adjusted trial balance. I'm just running down my payables. We have quite a few, particularly because of our salaries. That takes up a lot of payables here. Medical insurance is $351.30. Unemployment to the state is $112.86. Federal is $16.72. Federal income tax payable $7,521.44. And dividends payable is my last one for current liabilities, because remember, current liabilities are ones that we would be able to pay within a year if we needed to. So when we do that, we're going to get to a point where we need to total all of our current liabilities. So again, when we do this, we want to make sure that we're pulling only from this second column, and all the way down, we total those up, and we get total current liabilities of $45,043.85. Lucky for us, we only have one long-term liability, which is our bond payable here at $10,000. So we plug $10,000 in for our long-term liability, which means our total long-term liability is $10,000. So to find our total liabilities, we take current plus long-term, and that's going to give us $55,043.85. Now we get into our stockholders' equity, and we'll probably need to transition over to look at our statement of stockholders' equity, so you have everything, all the up-to-date balances here. So our current value of capital stock common here is, if we look under here, here's capital stock common, and here's our balance on the last day of the year, 5,000. So we're going to plug 5,000 in here. Then we also have our paid-in capital in excess of par common. Again, you can scroll down. Here's our balance on the last day of the year, which is 20,000. Oops. To find our capital stock, we go down here. Here's our balance at the end, 5,000. So plug that in. And lastly is our up-to-date balance and retained earnings on the last day of the fiscal period, which is $60,088.85. And so we total all of those to get our total stockholders' equity. Luckily, we can kind of cheat and take it off of our stockholders' equity statement, which it's $90,088.85. I'm just going to hide this because we don't need it anymore. And then in order to find our total liabilities and stockholders' equity, we take our total liabilities, which is $55,043, and our total stockholders' equity, $90,088, and when we add those two together, we end up with $141,132.70. Now remember, the most important part of the balance sheet is that our assets equal our liabilities and stockholders' equity, which they do. If they did not, we would have an error somewhere, and we would need to go back and figure that out. But we have now completed 3 of our financial statements: an income statement, a statement of stockholders' equity, and our balance sheet.